Here is a testimonial for the highest paid part-time job in the world from Katrina Alexander.
So I'm approaching 3 years in this academy. All of my accounts have increased trading, investments, business, and personal accounts. This academy can produce results in all areas of your life when you do the work. Yes, you have to work on your psychology and mindset to get the results.
Thanks for tuning in. What we're going to talk about is how to see the trade. And what my goal to do with this video is to give you kind of like an over-the-shoulder view of my perspective and some of the things that I look at when I'm trying to understand where a trade is at. This is not going to be investment advice. I'm not telling you what to do. What I'm trying to give you an understanding is something that you may not have been exposed to, is what are some of the things that a person may be looking at when they're trying to set up a trade. What'll make this video different than a lot of other videos you may be watching is I'm not solely depending upon a chart. And one of the reasons is because I may be looking at things on a longer time frame. I may be looking at 6 months out to a year and looking at where's going to be the larger movement in something going out on those larger time frames. And therefore, I don't want to depend solely on a chart to make that decision. Okay, so that's kind of what we're going to talk about in this video. Now, what we're going to look at specifically is the Russell 2000 index, and that's going to be a stock market index that measures the performance of the 2,000 smaller companies included in the Russell 3000 index. And I pulled this screenshot off of Investopedia. How come, first question we want to ask ourselves, how come the companies in the R2000 are not in the S&P 500? And it's often because they're what we call small cap companies. You look at the S&P 500, these are large cap companies. When we're looking at the R2000, is what we're going to call small cap companies. Now, what are small cap companies? A small cap stock or small cap company is a stock from a public company whose total market value is about 250 million to 2 billion. You're looking at a Tesla, you're looking at an Apple, you're looking at an Nvidia. Their market cap, some of them is in the trillions. What we're looking at is a lot smaller companies. Total market value is going to be about 250 million, which is extremely small, to $2 billion. So here's some of the characteristics of these companies in the R2000. The company's smaller. The company has more potential for growth because it's smaller. Small caps are normally more volatile than big caps. Now, when somebody's trying to sell you on investing in the R2000 or even the R3000, this is what they're going to sell you on. You're able to get into smaller companies, so you're able to get in a lot of times at a lower price point. Getting into a company that you think has a lot of growth under 100 can be more attractive to some people than trying to chase Nvidia. The company has more potential for growth because it's smaller. These companies are often, I would not say less established because some of them have been around a long period of time, but they haven't really hit their growth curve yet. If you're looking at a Coca-Cola, the question you want to ask yourself is, where is the growth coming from? They're still going to drive a lot of revenue, but where's the growth at? With a lot of these small cap companies, there's still a good potential for growth because they haven't really hit their growth curve yet. Small caps are normally going to be more volatile, which means because they normally have not hit their growth curve yet, there's more opportunity for them to move up, but also there can be a lot more opportunity for them to move down. Unless something really extreme happens to Coca-Cola, they're only going to sell off by so much. When you're in a lot of these smaller cap companies, they can shoot up to the moon. They also can get sold down very aggressively because something that goes on inside the company. Now, what I have found out about many R2000 companies just doing my own research. So we gave you like the company slogan on R2000 on the earlier slide. Then what I do now is I go do my own research. What I have found about many Russell 2000 companies, and this is from me just doing extra research and going a little bit deeper into the subject. Many Russell 2000 companies are not profitable. Around 25% of the non-profitable companies in the Russell 2000 are going to be biotech. Russell 2000 companies have more floating rate debt. That's going to be 45% Russell 2000 versus 9% S&P 500. To me, the floating rate debt issue stood out as an opportunity for a trade, right? So let's go again. We know that Russell 2000 companies have more floating rate debt. That's going to be 45% Russell 2000 versus 9% S&P. Definition of floating rate debt from Investopedia. Floating rate interest rate rises or falls with the rest of the market or along with a benchmark interest rate. So the underlying benchmark interest rate, it could be the LIBOR, the London Interbank Offered Rate, the federal funds rate, or the prime rate. So the question I want to ask myself again is that as interest rates rise, how does it impact Russell 2000 companies? If there's a Russell 2000 company and they have a floating rate, and it's tied to the federal funds rate. As that rises, how does it impact Russell 2000 companies? As interest rates lower, how does it impact Russell 2000 companies? Same scenario. They need to go get financing from the market. It's going to be tied to the Fed's fund rate. The Fed fund rate gets lower. How does that impact them? And this is often how I set up trades. What I do is I just go get some fundamental basic information on what the situation is. Now, let me give you a caveat. I'm coming into every trade with my own understanding of how the financial markets work, which is why I really try to help people get the fundamental understanding. What I understand in America is that businesses without capital struggle to grow, right? That's just a reality of the situation. If you're a business and you cannot get access to capitalization, you can struggle growing. Therefore, one of the biggest issues for any business when they want to continue to scale out and grow, and we're talking about small cap companies. So the average person that you see on YouTube talking about how big their company is, their company's not worth a few $1 billion. So if I have a company with a market cap of $3 billion and I want to expand that company, it's very likely I got to go find access to capital. And it's often that access to capital that can be one of the characteristics of success or failure with that particular company. Then the question is, what is going to be the cost of capital when you go get it? Because I understand that element of it, I understand how interest rates can impact the ability of a company to perform well into the future. Because if they have to take on the capital at a higher rate, it could create stress. If they could take on capital at a lower rate, it could alleviate a lot of that stress. Then we're looking at the fact that some of these companies, especially in the biotech space, are not profitable, which means what? They're going to have to burn through a lot of capital to get themselves in a position where they even have a chance of being profitable. So what do they need? They need the capital markets to be very open to them and what they have going on. But those capital markets may be less open to them if the cost of capital starts to go up. These are the kind of things that allow me to set up a lot of trades because I understand fundamentally how the market works in the first place. Then I'm able to use that understanding to look at a situation and ask myself questions around what I understand the macro situation to be, what I understand the sector or industry to be, and then what I understand the operations of that company to be. And then I'm able to act on it. So that's going to be how to see the trade. Hope you got some value in it. David W. Williams, also known as Diamond Dave. Talk to you later.